The next time there's another cycle, another opening, another opportunity, I'll be better prepared.
Hello everyone, welcome to another episode of The Real Estate Path. I'm your host, Jim Lee. This show is about the real journey, not just some highlight reel you see on Instagram. Because success is not built on fancy suits or luck. It is built on failed offers, blown budgets, and the guts to keep going when everyone else tap out. Whether you are a seasoned pro or you're new to the game, we're here to deep dive into the wins, the losses, and the lessons behind each real estate journey. Today, I have a very special guest, Robert Nomura. Welcome to the show, Robert. Can you give us a little context into how you got started with real estate? What inspired you?
Yeah, it was a long time ago. I was actually a teenager, and California was in a huge recession. And back then, you could basically buy a house, a 3-2, for the same price as like a BMW or Mercedes. But I was a little young, so nobody wanted to go in with me. Nobody wanted to listen to me. But I saw like that whole market basically disappear, come and go. And then ever since then, I said, okay, the next time there's another cycle, another opening, another opportunity, I'll be better prepared. And that's kind of how I got started.
Oh, wow. During that cycle, what lesson did you learn? Did your family leave a legacy behind, and did you have to manage those properties?
Got into more as a limited partner in syndications, apartment buildings, and different types of assets. But then actually what happened was through that experience and meeting people, earlier this year, 2025, I was invited to be a GP. And so we've done like two kind of conversions. Small apartment buildings, we're adding ADUs, and those are in process now.
Okay, so you started off as a passive investor, and now you have transitioned into more of an active investor.
Correct, yes.
That's very interesting because usually it's the other way, which is you start off as active because you want to get some experience, get your feet wet, and then eventually you figure out, okay, I don't want to be landlord. I don't want to deal with tenant, toilet, and trash. I'd rather just delegate to property management company to do the work for me, or just have a team, like you said, general partners run the deal for me while I focus on making money in W-2. So walk us through, like, how did you decide to be passive investor first and then transition to become active investor? Were you seeking for like mentorship just to see what's out and park money in a specific deal, see how that works out?
Yeah, so for me, I've always had a mentality of an investor. So I do have family who have had like small businesses. So I've been able to see, things come and go, it's like up cycles, down cycles. And so that's always given me like a perspective on just business in general, small businesses or real estate, whatever the case is. And then, like I said, when I was really young, we were going through a down cycle in California. You can buy a house like for the price of a car, basically. And nobody wanted to listen to me back then. So when that happened, I had the opportunity. For me, it made more sense to kind of like find people who are good managers, have a good track record, and actually partner up with them as a limited partner. I've done a few small businesses, but I always feel like there's other people who are smarter than me, and I'd rather find them, put money with them, and I let them kind of like run the show, and I can just kind of benefit from their experience and from their work.
Okay, so what type of businesses have you operated or been part of?
So me personally, it's been more like a consulting in marketing. That's the majority of it. A lot of it's what's called direct response copywriting, email marketing automation. But then just through my close family, different things like tire shops, restaurants, and also a handful of people with small landlords. So I've seen quite a big array of different businesses.
Awesome. So talk a little bit about the email marketing you mentioned. I mean, it's newsletter. I think a lot of people overlook sending out one. And I think it's very important to always keep your audience, your tribe engaged in any forms, right? Whether it's social media channel, newsletter. And I feel like newsletter is slowly dying out, but I feel like it's still very effective if you really know how to leverage the power of just getting email address and keeping your audience in mind of what you're doing, because it's always changing. So can you tell us a little bit more?
For me, like email is just a medium, so like what I tell people as a joke is like, if it would work, handwriting a little note and taping it to like a pigeon's foot, I just send that all day long. But email works, and it's definitely evolved. So it's not just email, it's marketing automation. So whether it be email, SMS, push, all that nowadays, all the modern platforms can kind of send out all those pieces, and sort of the same process, so how do you stay in touch with people? How do you motivate them? How do you kind of win them over, win their hearts and minds? And so like, because I have a copywriting background, email is just the medium that I prefer to use. It could be social media, it could be anything, it could be, websites, web pages. But how do you actually send your message to people so they actually resonate with you and that you can kind of win their hearts and minds?
So how often should someone like me as a real estate investor be sending out these newsletters? What's the frequency of it and the content? Can you just go into more details?
Sure. I'm definitely a big proponent for daily emails. And then a lot of times when people ask for stuff, then you can send them as much as as they're willing to receive. One example somebody's told me is like it's kind of like a talk radio, right? So they're there every single day, and so you just have to be interesting, and you have to say things that are important to them, things that are meaningful. A lot of times the newsletters they're really boring because they're just like a collection of just stuff, but they're not really making an emotional connection, and that's really where the trick is. How do you actually speak to people through email, through SMS, or whatever the case is, but you're actually making a connection with them so that they actually look forward to hearing from you, the next day.
What's the percentage ratio when it comes to sharing your professional, your career, the things that you're working on versus personal stuff through newsletter? Because I know in social media, you kind of have to keep that balance too, right? Like people want to get to know you as a person, you, Robert, what you do, how you take care of your family, what you do for fun and all that. How much of that should go into a newsletter?
Yeah, so there's a trick. I wouldn't call it a trick, but there's a skill that I learned a long time ago, and I apply it all the time, is like you have to make the connection, right? So you could talk about anything like boring, everyday, daily life, but then you somehow have to like make that transition where you connect it to what you're selling or what you're promoting. It's definitely a skill. It's not the easiest thing to do. If you can master that, then you can basically, anything can be turned into like a piece of email. So like even this like pillow, you're talking about the pillow, how you bought it, why you like it, the colors, and then somehow turn it into like, what that has to do with your job or your business. So it could be, oh, this is a pillow, and I went shopping with my girlfriend, and I hate going shopping with my girlfriend because it's so boring, but she made me buy these pillows. And by the way, I also sell real estate.
In terms of newsletter, what type of AI technology that's out there people should be aware of that's currently being integrated into copywriting?
Use them all. The tools are tools, but they don't turn the tool into like your idol, your god. Again, it's all about making that human connection. But if you can like apply your efforts, then that's how I like to use tools. Like I think it's a mistake. People are using AI to do all the writing for them, and they just like kind of cut and paste exactly what it gets shot out, and they try to send it out to people, and then it gets very, very boring very fast. And then now like it's turning into a commodity because it's so easy for people to use AI to create copy. But the problem again is they're not making a connection.
Yeah.
It's all about winning hearts and minds. If you can't win hearts and minds, then you're not really accomplishing anything.
How does this skill set transfer over to real estate world?
So last I was actually living in San Diego. I was living there because I was working for a venture capital firm, and I only got hired because I have a background in email marketing. They had about a million person email list, 30,000 investors, and they brought me on board, one, to clean up because their whole marketing automation platform was a mess. So one of the first things they did was just clean it all up, improve the deliverability, and then win hearts and minds. So people wanted to reinvest again. And then from there, I started the true projects that I worked on this year is because of the people, the relationships that I made through that venture. And so that was a much smaller scale, but the same idea. Stay top of mind, stay relevant, and kind of make the connection to like what we're doing and what that's important to our potential investors, and then making them look forward to hearing from us again.
Walk us through that operation. How does that usually work? If you got a list of a million people and you send out newsletter on a weekly basis, what type of content do you usually send out? And do you guys host webinar? What type of value do you add to your audience when you're consistently sending so many newsletters out?
Part of it was I was developing leads. We had an in-house sales team. I think it was about 12 of them, somewhere around there. And some of them were in other countries. And so I think I generated 2,000 appointments, calendar appointments for all the salespeople while I was there. And then I was able to generate, I think it was like under $200,000 in direct investment. So they didn't talk to anybody. They just kept receiving the emails, and we could see that then they placed an investment direct on their own. That was pretty cool. Last year was like election year. So I definitely took advantage of the current events and what's going to happen if this person wins, what could happen to the economy? If this person wins, what could happen to the economy? A little bit historical perspective, what has happened in other countries, things like that. So I just tie that into stories and how that, relates to whoever was reading their pocketbook, and then, just open up the opportunity for them to want us to know more, to speak to one of our salespeople.
That's why I also notice about my audience is that they love the current events, like what's happening, government shutdown, and so forth. Can you share a couple of current events that you currently are pushing out that's engaging your audience attention?
Yeah, so let me talk about last year too. So there was some talk about, so not so much the election, it was all tied together, but prices were going up, right? Inflation.
Oh yeah.
And so basically I had a story. This is like family friends of ours who had actually lived through hyperinflation in South America. And so I knew that story. And so I just tied in, what's going on now here in America and what potentially could happen. And what does that mean if it does turn into hyperinflation, which is not uncommon around the world. America, so far, we've been lucky, right? And then how this family, how they were able to survive hyperinflation. And part of it was they actually had real estate and that real estate revenue and income. So that's how they were able to ride through hyperinflation. It wasn't easy, but because they had, that asset, hard asset, they were able to stay stable, during like those 3, 4, 5 years of hyperinflation. And so I just tied that into, you should give us a call and to find out, if any of these investments make sense for you. Yeah.
Brilliant. That's how your audience is able to relate to you guys, right? That's how you build that connection you mentioned and the consistent relationship that you stay on top of their mind. What is one deal that you've done in the past where you haven't had much success? It didn't go the way you wanted it to be? And what's the lesson behind it?
Interesting. Yeah. Well, the one that jumps out at me is it's not really real estate related. It was more of like a private equity. It's a small chain of laundromats. The business plan was, high cash flow, right? Not so much equity, but high cash flow. But yeah, we invested in it, and so far they're operating, but they're not positive. So then there's no dividends. So that's really frustrating because the whole reason why we wanted to be a part of that was because the potential for high dividends and cash flow. So up to this point, they're operating, they're not paying dividends. There isn't enough cash flow to pay it, and so it's just like what we learned from that. That's a hard one because everything looked good. The management is fine. They have other similar assets, but a different fund, I guess, that are cash flowing positive. And so right now, in terms of learning, I don't know, just be more careful, I guess. I'm still looking at businesses because I'm still looking for higher cash flow. In addition to real estate is great for the equity, but definitely I'm looking for more current cash flow now. So I think that was just like a learning experience.
Can you walk us through that more in detail? I know that in the real estate world, in the multifamily syndication, when things are not producing cash flow, it's usually because of interest rate has gone up, unforeseen interest expense, right? And so in my 2 syndication deal, that's what happened. Bridge loan kind of just went, the interest rate went from 4.5 to 9%. And so we had no cash flow. So how does that work for business? Is that pretty similar? Is it based on the loan you take out?
Part of what's going on right now is they have 3 locations, smaller, 2 of them are newer. And so they're operating, but just the cash flow isn't as high as they're expecting in terms of people, customers going in and doing laundry. Another part is they have a couple of capital expenses that happen. So AC unit went out, things like that they have to use whatever available cash flow to cover those things. That's been part of the issue.
And you mentioned earlier you're more focused on business acquisition than real estate. Tell us why during this downturn. What do you see?
Yeah, so definitely cash flow is king. Right, so I'm definitely looking for more ways to get more cash flow, with whatever available assets we have. I mean, I like both, right? But just in terms of day to day and some of the plans that I have, then I know I need as much cash flow as possible and current cash flow as opposed to maybe waiting 5 years, for a deal to sell out, and most of it coming as equity. Some balance of that would be good, but I know of everything that we have set up, most of it has been more on the equity side. It has some dividends, but 8% pref or whatever, right? So it's like a small amount as opposed to usually when you look at businesses and everything's projection, could be 20%, 15%, cash on cash, that kind of thing, right?
Yeah.
And it just depends, but yeah.
So can you share a little bit to the audience, the difference between cash flow and equity play? Which one did you start? It sounds like you have more equity play right now. You want more cash flow. And during the market cycle, like you mentioned earlier, what would be advantageous to have more cash flow than equity? And what would be more advantageous to have more equity than cash flow?
Both are good, right? And if I was 90 or 80, then maybe more cash flow, right? Because I don't have many years to try double money. But so let's say with limited partners in the past, you could put in money and then maybe they give you 8% pref, right? So even it's 100,000, 8,000 a year, so it's not going to change much, right?
Yeah.
But maybe you can double your money at the end of 4 or 5 years, right? Depending if everything works out. As opposed to business, maybe there isn't that much equity, depending on the business. But then maybe it's 20% cash flow, depending on how profitable it is. So what I'm looking to do is I'm looking to find some kind of a balance. Most of the stuff I've done so far has been on the real estate side. And so it's more you have to wait 4 or 5 years. Maybe there's a cash out refi. And that's assuming everything is stable, right? Not what happened the last couple of years. So that's all. I'm just trying to find some kind of balance where I have some things that are appreciating, but while we're waiting for them to appreciate, then also have some cash flow coming in.
Yeah. And you mentioned you're both limited partner and a general partner. And what I find fascinating about you is that you actually invest in syndication in California. So it's very rare that I find people like you. Typically, I see most investors, they, go out of the state for cash flow purpose, like you mentioned, but also to mitigate risk, right? Because there's, regulation landmines, there's tenant-friendly state here and rent control. So walk us through what made you decide to invest here. Is it just because it's local? You want to be able to see the building yourself, or is it just the partners, the deals?
Yeah, so definitely it's true what they say, real estate's local. A lot of the numbers that people throw out, they're usually nationwide numbers. And so these deals happen to be in San Diego. San Diego, if you know the map is landlocked, right? There isn't much space to grow within San Diego, because there's a military base in the north, there's mountain ranges and national parks to the east, and then Pacific Ocean, right? And then Mexico to the south. They're short about 100,000 units, and the city is, at least the past 3 or 4 years, they've already been pushing pushing that they got to get more units up because for affordability and just because there's a shortage. San Diego also is like a very diverse economy, military, universities, tourists, trade, cross-border trade from Mexico, and then also just ocean trade, etc. So there's a lot of things that are going for it, which kind of makes it its own little pocket compared to the other parts of California. Rent control is different than LA, I think 3% or whatever. San Diego, I think is 10%. So even though it has rent control on paper, 10% is pretty healthy. And same thing, people move out, then you can adjust it to market. For sure, prices are higher, but these particular deals are kind of like they're a cross between development and value add. So what we're doing is we purchase buildings that have units that are rentable. We're renovating, we're increasing rents where possible, but then we're adding a bunch of ADUs. Like one building's 10 existing, and we're adding 8 ADUs. So we're basically going to like 80 times the amount of rentable units once it's done. And also it's a fast turnaround because they're ADUs conversions, so we're not building from scratch. Our projections is like within 24 months we'll be in and out. And so all those pieces kind of like make it more interesting to me.
So are these ground up development like built to rent or no? Okay, so these are like existing multifamily where you have a big enough lot to add ADUs or conversion, right? Garage conversion and so forth.
Yeah, so basically it's a covered land play. Yeah, with an existing property that's already generating cash flow, not cash flow positive, but cash flow. But once we add on like the ADUs, then basically just the value adds jumps quite a bit.
I'm gonna shift gear and just ask random questions where just so the audience can get to know you, Robert, as a person. What are the hobbies or passion you have outside of real estate?
Oh, man, what I tell people is like as I get older, I get more boring. That's one thing, but definitely I like hanging out at the beach. I do that a lot. And then in just a few years, I came to Christ. So I've been doing a lot of like church stuff and Bible reading. Yeah, for sure. And Bible study.
Yeah, absolutely. I think majority of my network, I'm surrounded by a lot of believers and it made me become a believer too.
Okay.
So it's great. It's good to study Bible, go to the church and really get in tune with the morals.
Yeah, like a couple of years ago, as I was coming to Christ, I started like a small business group that's like kind of like a Christ-centered. And so we were basically teaching people how to apply the Bible in business every day. A lot of times people, they go to church on Sunday, but as soon as they leave church on Monday through Saturday, they're like back to the heathen ways.
Yeah. Good for you. And how long have you been doing that now?
So this group has been going on 5 years now. Yeah. We started in the middle of COVID.
Awesome.
Yeah. And so now we have like hybrid meetings. So Zoom for people who don't live in the LA area, and then people who want to come in person, they can come in person. Yeah.
Okay. I'd be interested to hop on that Zoom at some point.
Sure. I'll let you know.
Very cool. If you were in real estate, what would you be doing now?
If I wasn't in real estate, I'd be a trader, like a stock trader, short, long positions. In fact, that's kind of like a little midterm to long-term goal.
Is that how you started before real estate investing? When it comes to investing in general?
Yeah. So I would say I probably started learning about real estate before when I was really pretty young. And when I had some money, then I started like, doing trading stocks and all kinds of stuff. I've traded options, I've traded Forex, I've traded stocks.
Okay.
And then before I put money into real estate, so I guess that's fair.
Okay. Yeah, because the reason why I say that is because majority of my friends and family, that's all they do, just buy stocks. And one click of a button, I'm like, they just don't want to do the work. They want to make passive money, but they don't want to do the work. And that's, I guess that's the easiest, where I just bet on a company. How do you recharge when you get burnt out from your daily activities?
That's when I go to large bodies of water. That helps me like unwind, reset, recalibrate.
Awesome. Is there anything else that you'd like to share with the audience that we haven't touched upon?
If you're brand new or getting started, keep at it. It's definitely a game of I guess, learning and growing. Everything I shared today is just, happened, let's say, the last 5-6 years. And before then, it was a lot of like hit and miss for sure.
Yeah.
But I just kept at it. And, thanks to God, things, kind of turned around. But, for sure, I think anybody else probably would have like stopped or quit or like given up. In fact, I've seen it. I've been through multiple different real estate cycles. And then a lot of times, like you'll see like people running like real estate clubs or whatever, and then after the cycle goes down, I don't see those people come back. A lot of them, right? Very few people I've seen like through 1 or 2 or more real estate cycles.
That's what I said. It's really the gut that you have to keep going when everyone taps out, and that's where you really thrive in real estate. Because I've seen exactly what you talked about, where during this last downturn when the Fed hiked the rates, it put a lot of these multifamily syndication underwater, the ones that's on bridge loan, and I see so many people just quit out of real estate. Like they got out of real estate and went into business acquisition, they got out of real estate and got into a W-2 job. And I don't blame these people because some of them, they do have family and kids. They got to provide and you just have to figure it out. But it sucks to see so many people just gave up just because the deals went south. But it happens. Like you said, you've seen this multiple times. What's the craziest and unexpected thing you've ever seen, witnessed throughout all these cycles?
All these cycles.
If you had to pick one.
When it first kind of like my eyes opened to like real estate as like an investment or, as a wealth building tool, when it clicked for real during that down period where there was a huge recession in California, people were auctioning houses. And when I tell people now, they think I'm crazy, but they couldn't even get rid of houses. They had public auctions.
Wow.
During the worst time, the price would come down. It was like a reverse auction. They started out at this price, but nobody was bidding, so they keep lowering it. And nobody believes me. But that was the 90s after the earthquake. And yeah, you could find a lot of houses again for the same price as a car. And then they were auctioning them off and they couldn't sell them.
And back then, the setup is the same thing, like cash offer.
Yeah, if you're doing like foreclosures.
Cashier's check and all that.
Yeah, if you're doing foreclosures, probably cashier's check to be able to bid during the auctions, things like that. Yeah, for sure. I mean, cash is always king.
Yeah.
But yeah, that was amazing.
Wow. Okay. Very interesting. Well, thanks for sharing, man.
You're welcome.
Well, this concludes another episode of The Real Estate Path. If you got value out of today's guest, please hit that like and subscribe button and you will never miss another episode. And also, share it with your friend who is also on the real estate path. Most importantly, take what you learned today and use it because action solves all problems. Now go out there, make some offer, and build a life that you're always dreaming of. I'll see you next time on the next episode.